That's great. Okay, so then when you're doing the deals out of the syndicate or the fund, how do you source those deals? Is it still, do you have relationships with the founders? Are you doing buying in the secondary market now? Like how do you go about finding companies that fit that investment thesis that you told us about earlier?
So secondary is a very interesting one. So if I'm doing primary, that's very different of sourcing deals because you have to reach out or the funders reach out, et cetera, et cetera. In case of secondaries, I'm seeing a mix of either sometimes there are individual sellers or individual early employees or early investors who is reaching out, or sometimes I am investing in another fund which is investing on a larger pool. So sometimes I'm going into a fund of funds.
Okay.
The third one is sometimes I'm getting, directly other investors who are trying to offload. So, so we are seeing cases where an investor who is an early investor in a company, we all know the name of the company. I can't say it publicly, but anyway, so the investor wants to offload some of their shares and was asking me, do you want to buy into that fund? So, so they can get some liquidity.
So I'm curious with the timing on this, because this is when I stepped into this space, the timing of when you get access to shares to when you actually have to deliver cash back is not a big window, right? So how do you manage that, right? Because it sounds like you're sourcing the shares first and then perhaps going to your investors or syndicates saying, hey, who would like to invest? Like that might only be like a couple of days time. So, I mean, is that your experience? And if it is, like, how do you manage that? That's a lot of work to do in a short period of time.
Oh yeah. That's whenever. So that's what I have to manage LP expectations, because in case of primary, so there are a couple of very fundamental differences, right? So in case of primary, the terms are set, you know exactly what you're getting, the shares. In case of secondary, it's a very individual negotiation, right? So, so probably you close a secondary deal at X price, the next day someone else is selling at X minus one. So that creates some confusion unless it's a tender from the company. So that's one problem.
Yeah, of course.
The second problem, of course, is like you're saying, in some cases the deals move really fast. And that's where, you have to essentially go back to LPs and say, okay, we need to close it in 3 days or 5 days or 7 days. Some cases, we do have time. So so secondaries are usually very fast moving compared to primary.
That to me, I find it such a unique challenge. Do you find that your LPs are like receptible to that? Do they move that quick, or maybe you've trained them that way, right? They're used to it now with you because of the relationship you have with them.
Yeah, I mean, few are. I mean, there are LPs who find that timeline is too pressured, and so they usually don't want to participate in those cases. Or so when it comes for me to really sign the docs and send the wire, I just have to cut off some of the LP contribution because the funds don't come.
Understood. That's really fascinating. So do you find? I mean, some of the companies, especially in AI, the market is like very challenging or expensive, right? So how does that come into play when you're thinking specifically in the secondary? Is something just you look at a company and be like, man, I'd love to buy OpenAI, but it's just so competitive and so expensive. Like, I just don't think right now is a good entry point. Do you have those in your investment thesis, or kind of or maybe said another way, it hits the mark on the investment thesis, the company, right? And it fits the theme that you want, but just accessing the stock is too expensive, right? It's too much of a premium. Do you ever think about that, or if you come across it, is that something that you consider when you think about, hey, I'm gonna set up a fund or do a syndicate deal on this particular company?
Oh, definitely. Yeah, I think so. There are a couple of things that are happening in the secondary space. One is, in general, there is a significant discount, except for AI companies. In most of the large companies, there has been, I have done secondaries for Stripe, which was, at a significant discount compared to their raise, right? So, so there have been a significant discounts happening in many of the companies, to the extent I did not invest, but there were one company which was doing at 99% discount, right? So, so essentially you can, in front of your eyes, you have seen this company going from starting to $5-10 billion valuation in a span of 2-3 years. And then again, you're seeing that it's coming down almost 97-98%, right? So all those things are, we are seeing this in a very short period of time, this ups and downs. So of course, so the price is always an important. In case of AI, it is sometimes difficult because the market is so big. It is sometimes difficult to understand whether we have reached the maximum point or not. But what I think will
Okay.
ultimately end up happening in artificial intelligence, that couple of big names will get so much funding that they will be significantly ahead of others. So the question is, they will probably be the next Google or next Facebook or,
I agree with
at that
that.
level,
I
right?
agree
So
with
then the
that.
question is that,
Yeah.
then at that point, our strategy is more to get into the ship rather than,